sponsored by the Securities and Exchange Commission of Nigeria.
Welcome back to our program. Now, strong economic growth, attractive social demographics, and increasing investor sophistication have underpinned the growth of M&A activity in Nigeria in recent years. Let's now take a look at what to expect as more investors pour billions of dollars into this market.
Key driver of M&A activity that we will see is, just economic growth and economic prosperity in Nigeria will be a big driver. The second is a creation of a new Nigerian wealthy class. For example, over the next 3 to 5 years, you're going to see a mass of junior oil producers, just built among Nigerian entrepreneurs. When all of those people have acquired those assets and developed them a bit, they need to extract some value. And some of that value can be extracted through listings. Some other value will be extracted, through combinations and all sorts of other transactions.
From a shareholder's point of view, it encourages and enables the realization of value. If you look at recently, the purchase by Tiger brand of UAC Foods or Dangote flour, what essentially has happened is that shareholders in UAC and shareholders in Dangote flour have realized value.
The more generalist funds just literally tell us anything that has a consumer slant: breweries, pharmaceuticals, logistics, financial services, food and beverages, we will invest in. So the key is to find a company with decent management, robust systems, processes and governance, and a strong market position, and those will be very attractive targets for the private equity funds.
The market recovering now, certainly is beginning to impact valuation somewhat, but given that we've come through 3 difficult years, one of the easiest ways for any Nigerian investor or entrepreneur or investors in this market, be they Nigerian or international, to actually unlock value that they've built is by entering into an M&A transaction. And that will be a motivator for a number of deals. But also current valuations, across the market where, P's, are still some way far off, where, PE ratios were, 4 years ago, also does portend, significant value.
We have corporates that are seeking regional expansion into high growth, high potential markets. And we also have financial sponsors, which is a broad name for private equity funds and the like. And I think those are the 2 categories of players that we're going to see the most activity from in the short term. Kala recently set up a $500 million sub-Saharan Africa fund. And I think they're the first of the large global private equity players that has set up a dedicated fund for sub-Saharan Africa. PE funds like Actis, Helios, Emerging Capital Partners have been active on the continent for a very, very long time. Some notable transactions that have been done include Helios' acquisition of Interswitch. Helios has a towers business, telecom towers business. As we know, Actis invested in UAC and has since exited and retains investment in Muka Foams and Diamond Bank. I also think that we're going to continue to see global consumer players that are looking for growth exploring acquisition targets in Nigeria. And let's not forget that some of the biggest ones in the world, the Unilevers, the Cadburys on the consumer side, and on the brewery side, the Heinekens and Diageos have been here for decades. And we're going to see people increasingly trying to get a foothold in what is going to be a very attractive market. And then I think in the financial services sector, we're going to see some more consolidation, both on the banking side and the insurance side. And the oil and gas and power sectors are the beginning of what I think is going to be a very, very, very long runway of corporate M&A activity.
Very, very shortly, Old Mutual will be completing an M&A transaction, which essentially delivers control of Oceanic Life to Old Mutual. This essentially will, provide Old Mutual's first entry point into operating a life insurance company. Old Mutual, as you're well aware, is Africa's largest financial services company, and that's a very, very exciting transaction for us. There are a number of other transactions happening in that sector, a couple of which will be announced in the next, I would say, 10 days. I would say in total that as a firm we're working currently on somewhere around $3 billion worth of transactions in M&A space, and this is about 7 or 8, different transactions, which, 4 or 5 of which will be announced before December 31st. Our expectation is that this will become a multi-billion-dollar M&A market.
Capital market operators that see the potential for growth are taking positions in the market. Recently, First Rand Bank of South Africa and FSDH, Nigeria's first discount house, were granted merchant banking licenses.
It's still part of banking or investment banking that does not have much depth in Nigeria. We will probably, in the near future, I'm talking about 5-10 years, maybe see an increase in such opportunities.
Several studies over the years have pointed to a high failure rate for M&A deals in advanced markets. One such study by KPMG indicates that as much as 44% of M&A deals studied led to an erosion of shareholders' value. However, companies and investors exploring Nigeria are encouraged to recognize the differences in the terrain.
But in a country like Nigeria, where there's so much opportunity untapped, then clearly it's not really the case that it destroys value. You need that kind of activity to actually extract the inherent value and create those platforms for entrepreneurial activity to grow, for investors to, harness whatever opportunities they see. So I wouldn't say it's quite true in the case of Nigeria. You probably see those kinds of deals creating a lot more value. Why? Because the target companies are constrained in terms of capital. They are not able to realize their own potential fully. So they need other people to come in and inject that capital to drive the growth that they are capable of. But that's currently not the case in Nigeria because capital is not readily available. So in a country, in a situation like that, you probably see that M&A is much more value enhancing than otherwise.
While Nigeria may present a fundamentally better market for M&A success, there are a number of constraints and challenges that limit the dynamism of advisors and investors.
In terms of constraints, when we speak to potential investors, they flag two things. One, they say they still see a certain lack of sophistication when they engage with domestic companies for mergers and acquisitions transactions. People don't understand why they should give warranties, for instance, when the company is being sold. But I think with more and more of these transactions being effected, and professional advisors, bankers and lawyers also getting more sophisticated, we would see this constraint fall aside.
I would say that perhaps, the only limitation might be a process limitation, firstly in terms of the time, to market for M&A transactions here. And some of that is understandable. The SEC is doing two things. They're looking first and foremost at the transaction itself, from a regulator's perspective, but they're also looking at antitrust provisions. In other markets, typically you would find that those two functions would be looked at by separate parties who might work concurrently. Typically, the antitrust approval might come after the transaction approval.
Okay, one of the challenges I see with M&A in the first place is the uncertain, long regulatory approval process. If it's been a hostile takeover, one of the elements you'll be relying on is speed and stealth. If it's going to take you a few months to ratify or get your takeover approved, the target company that is the source of the hostile takeover would have plenty of time to destroy erode value. So what you might end up with is a carcass rather than a company that you at the time thought was attractive.
We had a round table that was tailored to the M&A section of the capital market, and the engagement was very rewarding. We met and put our heads together on how to deepen M&A culture in the market, and also look at the laws and then the procedures on how to improve them, and also the gap that exists in the law.
But I think one of the outcomes of this, very, very valuable roundtable that we've had with them in the last 3 weeks is that you're going to see, some key enhancements to process, which will all be beneficial to us.
I mean, if I'm an entrepreneur and I have this big, bright idea and I spot opportunities, I don't have any low cost to go raise equity anywhere. So the debt market is a much more accessible avenue for getting capital to drive your dream. To the extent that that market isn't developed, then it's a constraint that investors generally have to face. Now, for now, we're seeing only established companies being able to play in that space because yes, they have better access to capital. But ideally, you want a more developed chain from venture capital to angel, whatever, up until the actual capital markets, debt and equity. That entire chain needs to be quite much better developed than it is now for the kind of M&A activity that's to fully realize that pipeline that we know, it's inherently Nigeria inherently offers in terms of the opportunities versus what actually is going on in the markets at this point in time. Debt is the typical currency for M&A deals, and the environment is not very favorable at this point in time. We need that to improve significantly before we see investors coming to take those opportunities.
But I think what is even more significant, as foreign companies, international companies, look to take advantage of the great investment opportunities that Nigeria has to offer, they can basically either merge, acquire, or take over an existing business, successful business in Nigeria, and bring the skills that they have. This is what Tiger Brands has done. But it's also what SAB Miller has done by purchasing international breweries. So what we expect to see is certainly see this happen with insurance companies, see this happen with capital market operators, brokers merging. We should see it also with law firms and accounting firms and other professional firms. So it's clearly an area of opportunity waiting to take off, one that can leverage from the great experience that we've had in the banking sector.
All right, that's our show on Eye on Nigeria's capital market for this month. I certainly hope you've learned a thing or two about M&A activity in Nigeria's capital market. Certainly we'll continue to track activities as many people expect a lot more dollars to flow into this market. I'm Wale Famirewa. Until next time, it's goodbye.